All right, so we're diving into healthcare stocks today, looking at those dividends. I'm excited to learn more about these two companies you picked out, Merck and Medtronic. I mean, they're huge, but what's exciting is, well, like, what do their futures look like for building up some passive income? I mean,
Yeah, you hit the nail on the head. Healthcare is a really interesting sector for passive income. Like, people always need medical care, right? So even when the economy is, a little uncertain, healthcare companies, they tend to hold up pretty well. But starting with Merck, there's been some buzz because their stock, well, it hasn't been doing amazing. And a lot of that comes down to concerns about their cancer drug Keytruda.
oh yeah, Keytruda. I definitely heard of that one. What's going on with it?
So there are a couple of things that are, making investors a little nervous. First, there's a potential competitor coming up, a drug from Summit Therapeutics called, let me see here, ivonescimab.
Dividend.
Yeah, and it's going after the same market, that same lung cancer that Keytruda targets. So, there's a worry it could take some of their market share.
Makes sense. And then on top of that, isn't Keytruda's patent running out in 2028? I mean, that always shakes things up when generics enter the market.
Oh, it absolutely can. But here's the thing, Burke. They're not just sitting around waiting for this to happen. They've actually got Keytruda approved for a whole bunch of cancers, a lot, that this new drug, ivonescimab, isn't even going after, at least not before that 2028 deadline. Plus, they're working on this subcutaneous version, so it's injected under the skin, which makes it way easier for patients to take themselves.
Oh, so they're basically trying to make it more convenient, so even when the patent's gone, people still want to use it because it's easier.
Exactly, and that could help them, keep a good chunk of that market share.
Smart. So it's not all doom and gloom then, even with that patent cliff looming.
Not at all. I mean, they've also had some wins recently. Like, remember when they bought out Acceleron Pharma? Well, they just got FDA approval for Winrevair. It's for pulmonary arterial hypertension. And then there's that whole collaboration with Moderna. They're working on a personalized cancer vaccine.
Oh, wow, yeah, that's cutting-edge stuff.
It definitely is. And, it shows that they're not afraid to invest in the future. So yeah, Merck's facing challenges, but hey, that's pretty normal in pharmaceuticals. What really matters is the long game. They've got a real history of innovation, they're making smart acquisitions, and they're developing some seriously promising new treatments. Those are all good signs for a company you might want to, invest in for the long term.
That makes a lot of sense, especially considering their track record with dividends. I mean, they've grown those payouts by something like 71% in the last 10 years, and their yields right now is almost 3%. That's way higher than like the average for the S&P 500. So for someone who wants a steady passive income stream, Merck seems pretty solid.
Yeah, for sure. And speaking of companies that really know how to reward their shareholders, let's talk about Medtronic. They're actually on track to become, get this, a dividend king.
A dividend king?
Yeah.
What is that, like royalty in the stock market or something?
Well, not quite royalty, but it's a pretty exclusive club. It's for companies that have raised their dividend payouts every single year for at least 50 years.
Every single year. Wow.
Yeah. And Medtronic is sitting at 47 years right now, which really shows how stable and reliable they are.
47 years in a row. That's incredible. How do they manage to pull that off?
Well, one of the big things is that their product portfolio is so diverse. They make a huge range of medical devices, which means they're not overly reliant on any single market. Like back in 2008 during the financial crisis, they were able to stay pretty stable because they had all these different products and a big global reach too.
Ah, so it's like they don't have all their eggs in one basket. It's got to be reassuring for investors. But what about new stuff like innovation? Are they keeping up with the times or just coasting on their past successes?
Oh, they're definitely not just coasting. Like, one area where they're really making a splash is diabetes care. It's actually been their biggest growth driver lately. They developed this insulin pump, the MiniMed 780G, and it's the only one right now that has meal detection technology.
Meal detection. That sounds pretty high tech. How does that even work?
It's pretty amazing. So the pump uses sensors to figure out how many carbs are in a meal, and then it automatically adjusts the insulin levels so people with diabetes don't have to calculate and, adjust their doses all the time.
Wow, that's a pretty big deal for people managing diabetes, isn't it? And with, diabetes being such a global issue, it seems like a smart move for Medtronic tapping into that market.
For sure. And they're not stopping there. They're also getting into robotic-assisted surgery with their Hugo system. Basically, they're aiming to take on Intuitive Surgical, which is the big name in that field right now.
I've heard about that robotic surgery. Why is it becoming so popular?
Well, for one, it's way less invasive than traditional surgery. The incisions are smaller, so less scarring, less blood loss, and recovery times are so much faster.
And I imagine that means shorter hospital stays too, so costs go down overall?
Exactly. It's better for everyone, both the patients and the hospitals. And when you think about how the global population is aging and healthcare systems are getting more strained, well, robotic surgery seems like a perfect solution. It's right there to meet those challenges.
It sounds like Medtronic is making some really smart moves, positioning themselves for the future. But you mentioned they've been facing some challenges lately.
Yeah, their revenue growth has slowed down a bit recently. We can't ignore that.
Yeah.
But you have to look past those short-term blips and focus on the bigger picture.
Right, because no company's immune to a little market turbulence.
Exactly. And with Medtronic, their foundation is really strong. They have that diverse product portfolio, they're global, they're innovative, and they're committed to those dividends. All those point to a company that's built to last. They might be facing some headwinds, but I'm confident they can overcome them.
Especially as they get closer to that dividend king status. So to recap, it seems like both Merck and Medtronic have a lot going for them, even with a few bumps in the road. They both seem like strong options for someone looking to build that long-term passive income.
Absolutely. There's a lot to like about both of them.
It's pretty amazing to see how these companies are changing healthcare, not just adapting to it, but really driving those innovations. I mean, we're talking personalized cancer vaccines, insulin pumps that basically think for themselves. Makes you wonder what's next. What other crazy breakthroughs are coming?
It really is remarkable, the pace of innovation in healthcare right now. And, for investors, that means a lot of exciting opportunities.
For sure. When you invest in companies that are really out there solving problems, making people's lives better, well, that's got to be a good sign, right?
Couldn't agree more. And that brings us back to what we're really talking about today. Finding those companies that offer not just growth, but also that steady passive income through dividends.
And both Merck and Medtronic, they seem to fit the bill, don't they? Each in their own way. Merck, they've got that great dividend history, and they're pushing into these cutting-edge areas like personalized medicine. And then Medtronic, they're super stable, almost 50 years of increasing those dividends. It's pretty impressive.
It really is. And what I find interesting is that they both demonstrate how strong the healthcare sector is. No matter what's happening in the economy, people still need medical care. It's not a luxury, it's essential.
Exactly. And that makes it a really attractive sector for investors who are looking for a bit more, stability, predictability, especially now when things are so uncertain.
Right. And what we've seen with both Merck and Medtronic is that even when they face challenges, like Merck with the competition for Keytruda or Medtronic, with that recent revenue slowdown, they're still strong companies.
They've got those core strengths, their commitment to innovation, their diverse products, their global reach. All that suggests they can handle those tough times and come out even better on the other side.
That's so important for investors to remember. Look past the headlines and focus on the fundamentals, the long-term potential.
For sure. It's a marathon, not a sprint. But let's bring this back to our listeners. What should they be taking away from all this? What can they apply to their own investing?
Well, I think one big takeaway is that you really need to understand the specific challenges and opportunities within each sector. Like in healthcare, there's this huge wave of innovation with things like personalized medicine, AI, robotics, and the companies that can take advantage of those trends, those are the ones that are going to succeed in the long run.
So it's important to stay informed about all that, to make smart decisions. And it also seems like you need to look beyond just the numbers.
Exactly. Things like a company's culture, how committed they are to research and development, how well they adapt to changes in the market, all those things are crucial. Because investing is about more than just numbers. It's about the story behind those numbers, the people, the impact the company has on the world.
That's a great point. When we were talking about Medtronic getting into robotic surgery, it got me thinking about the ethics of all this technology.
That's really important to consider. As this tech gets more advanced and integrated into healthcare, we have to have serious conversations about the ethical implications, like data privacy, algorithmic bias, even job displacement. These are all things we need to address as a society.
Totally. It's not just about the tech itself, but how we use it responsibly, making sure it benefits everyone. And I imagine those ethical concerns, they have implications for investors too, right?
For sure. Investors are paying more attention to environmental, social, and governance factors, what we call ESG, when they're making decisions. And those ethical considerations are definitely a big part of that.
So it's not just about finding companies that are doing well financially,
Yeah.
but also making sure your investments align with your values, your vision for the future.
Absolutely. And on that note, I have a final thought, a question for our listeners to consider.
All right, lay it on us. What should our listeners be thinking about as they wrap up this deep dive?
Well, we talked about how AI and personalized medicine are already shaking things up in healthcare. But looking ahead, even further down the line, how might those technologies create even more opportunities for companies like Merck and Medtronic? I mean, especially when it comes to those dividends. It's something to think about as you research these companies more.
That is a really great question to end on. It really highlights how important it is to stay ahead of the game, right? To see those trends that are going to shape the future of healthcare and ultimately your investments too. And speaking of research, this deep dive has been a fantastic starting point, but it really is just that, a starting point. We've given you some great material here, and hopefully we've helped you pull out some of those key insights.
Exactly. We always encourage our listeners to, keep digging, do your own research, look into these companies even more, maybe even check out some of their competitors. And of course, talk to a financial advisor. Make sure any decisions you make, they fit with your own goals and your risk tolerance.
That's such an important reminder. We can give you the information and analysis, but at the end of the day, the best investment choices are the ones that you understand and that work for your situation. But hey, maybe that's a topic for another deep dive. We could explore the world of financial advisors, how to find the right one for you.
That's a great idea. There's always something new to learn about investing, isn't there?
For sure. But for now, we're going to wrap up our deep dive on Merck and Medtronic. We hope you found it insightful, interesting, and maybe even, a little inspiring. It's always exciting to look at companies that are pushing the boundaries, innovating, and really making a difference in the world.
It's been a pleasure joining you.
And to you, our listener, thanks for tuning in and diving in with us. Happy investing, and we'll catch you on our next deep dive.